This is Daybreak Asia. We are counting down to Asia's major market opens and plenty of things to keep an eye on this morning. We did just hear from SK Hynix, which is South Korea's second most valuable company, blowout results for the first quarter there. So that'll be keenly watched, April. But also we're going to be keeping a close eye on the yen. We have a Bank of Japan meeting, of course, about to start today, and that yen punching through levels we haven't seen for more than 3 decades, April.
Absolutely, and that's bringing those intervention jitters back to the fore. But as you say, it's also about earnings. And just remember how Tesla really helped to reinvigorate the markets with its plans just a day ago. Meta really potentially spoiling the party here, but we do have the open in Korea, and as you mentioned there, those earnings from SK Hynix seem to be working their way through into the markets. It's not just about how the company seems to be doing well with that advantage because it is a leader or seen as one in the high-end memory chip market compared to Samsung, but also how it points to this bottoming out in the chip market and potentially that recovery for semiconductor demand. We are actually seeing SK Hynix starting the day on the back foot, actually sliding about 3% now as investors digest that scorecard. And potentially what we got from Meta is bringing that downdraft into the Asian session. We did see the Korean won yesterday, the outperformer among the Asian currencies, looks to be reversing some of that today. Let's flip the board because, of course, we also got the open in Japan. And one of the things that we're watching out for, as you say, Paul, has been the Japanese currency. It's breached that 155 level. And this has got to do with that yield gap, as we saw the way U.S. treasuries were coming under pressure overnight. But now that we're watching the yen at the weakest level versus the greenback in about 30 years, consider how back in June 1990, when it breached 155, it was a matter of a couple of days before it reached the 160 level, though there is some skepticism as to whether we will actually see intervention by the finance ministry simply because of the timing. We do have a BOJ decision that's due tomorrow and Tokyo CPI number, so this does complicate the picture. Now, Japan stocks also under pressure after that recovery yesterday. Again, as I say, that was thanks in large part to Tesla's plans helping to reinvigorate the markets in Asia. Flip the board again. I want to take you to what we saw in U.S. treasuries. As I say, it was under pressure during the session. That idea coming through from Australia's hot inflation print, that inflation is stickier than central banks might like, that really put pressure on global bonds. So the further out into the curve you go, the less demand you see. The trader seems to be reluctant to put on duration. We did see an okay 5-year auction after a successful 2-year one. We have a 7-year one to get through. So this is what we're seeing across the curve. But as I say, really focusing on the earnings from South Korea here, Paul.
All right, thanks very much, April. Let's get a bit more detail on the SK Hynix earnings from our Asia stocks reporter, Yu-Kyung Lee in Seoul. Yu-Kyung, just in the early going here, we're seeing a bit of a sell-off in SK Hynix, weaker by about 3%. That's despite very impressive first quarter numbers and what appears to be a pretty decent outlook. So what's going on here? Are we seeing a bit of profit taking?
Sure. So SK Hynix reported much better than expected earnings, higher than analyst consensus, and yet we are seeing a big drop in SK Hynix share price today. That's probably because the macroeconomic factors such as the geopolitical risks and the FX rates, things like that, are getting a bigger attention from investors nowadays who have been buying SK Hynix shares so far this year based on its outlook on the AI rally, AI boom. Looks like earnings are really important. Earnings are really good, but investors are now seeing the macro factors a lot as a bigger factor affecting the companies like SK Hynix and other stocks in South Korea, other chip stocks in South Korea. So we have to see how the foreign investors flow from now on, and that may the answer to where the foreign investor flow goes on may hinge on the macroeconomic factors and the geopolitical risks, not not just the earnings. And another news that may have shaken investor confidence in SK Hynix is that the company announced this big capex plan for a new chip plant that is $15 billion worth. And some investors may be worried about the possible new investment increasing the chip supply going forward. That could also pressure memory chip prices.
Yes, that $14.6 billion expansion plan for a new fab plant in South Korea, that was announced. But also we've got SK Hynix saying it plans to modestly increase or somewhat increase capex this year. So is there potentially even more spending in the coming quarters?
Yeah, so the SK Hynix gave a lot of announced some positive news when it was releasing its earnings, such as that its NAND business has made a meaningful turnaround during the first quarter, and that is seeing the memory demand being steady. Especially, it sees a pretty good demand coming from the conventional memory, such as DRAM and NAND. Its investment announcement may be showing the confidence from the company that is pretty bullish on the demand coming from the AI investment from around the world. However, today's sell-off in the stock may be showing that investors are still pretty worried about the increase in the supply of the chips by the latest announcement from the SK Hynix. I'm pretty sure that investors are still waiting to hear more details about the SK Hynix view on the sector and also on the company's earnings going forward during the earnings conference call underway at this moment. So we'll have to see how this share price go after the earnings conference call is over, when there will be more details about how the company views the sector and the AI demand and its own earnings for next quarters.
All right, Asia Stocks reporter Yuk-Jung Lee there in Seoul. Let's take a look at how some of those chip makers are performing at the moment. And SK Hynix off those earlier session lows, still weaker though by about 2.2%. Key competitor Samsung in this place, and South Korea's largest company also weaker by 1.6%. Let's get over to our next guest, Fan Chuk Wang. She is Asia's CIO at HSBC Global Private Wealth and Banking. Fan, thank you so much for joining us. I just want to start, if I can, with your calls on some of those Asia tech names. And when you see a pullback like we're seeing now in SK Hynix, are you tempted to buy that dip? Our previous guest from Counterpoint says this is going to be SK Hynix's best ever year. Is this a good entry point?
We remain constructive on the Asian technology sector. We think the AI investment boom will continue to drive pretty strong demand for high-end memory and semiconductor products, and the Asian technology leaders are well positioned to ride on this global AI investment expansion. And this is going to bode well for earnings outlook. Currently, we are overweight on Korean equity market as consensus earnings continue to project around 64% EPS growth. We think the latest announcement from companies to spend substantial capex to expand the production capacity on high-end memory chips. And this is reflecting the very strong underlying demand observed by corporate management. So we think the fundamental outlook for Asian tech stock remain positive, and we will take this as a buy on dip opportunity.
All right. Outside of tech, what other sectors do you like for diversification in Asia?
Within the Asian equity market, we adopt an active diversification strategy given the divergent fundamental and growth profile. So currently, we have overweight position in Japan, South Korea, India, and Indonesia. Within the China and Hong Kong equity market, as we hold a neutral tactical allocation position. So we mainly focus on service consumption and high-end manufacturing and the telecom sector in China. So we look for companies that will deliver resilient earnings. And we also focus on the beneficiary of corporate governance reforms across the region, as we actually see quite positive momentum in corporate reforms in Japan, China, and now South Korea also unveiled more details about the corporate governance reform that encourage listed companies to enhance shareholders' values through dividend payout increase and share buyback, and these actually deliver quite attractive investment opportunities with strong fundamental support.
You're also overweight U.S. markets, and you're really not alone in that call. To what degree do you feel that the earnings story has taken over from Fed easing as the major catalyst for markets now?
Yeah, we actually see the main driver for the global equity market, including U.S. equity market, has been shifted to corporate earnings expectation rather than rate, given that in the first 4 months we see heightened rate volatility driven by uncertainty surrounding the timing of the Fed rate cut. But we see continuous strength in the U.S. equity market, mainly driven by improving macroeconomic outlook as the soft landing scenario continue to play out, and corporate guidance continue to point to pretty solid earnings recovery in 2024, and this is the key driver behind the U.S. equity rally. The tech company continue to deliver very solid earnings growth. We think the recent weakness in the tech stock reflect a tactical pullback rather than a trend reversal. So we continue to see opportunities in the technology sector, but importantly, we expect the U.S. equity rally to broaden beyond just big tech, as we expect the economic growth will continue to gather momentum, and this is going to benefit other sectors, including industrials, consumer discretionary, and financial stock in the U.S. So we expect the U.S. outperformance will continue to sustain.
We can't let you go without getting your view on the yen, which we see weakening to levels that we haven't seen since way back in 1990. We do, of course, have a Bank of Japan meeting starting today. Do you expect any sort of bold policy, maybe even a rate increase from the BOJ to defend the yen?
We expect the BOJ to stay on hold in this meeting. However, we do expect the BOJ will likely address the market concerned about the currency volatility. However, we think the BOJ will remain pretty prudent in normalizing monetary policy. But given the strong U.S. dollar, and this is mainly driven by the aggressive market repricing for slower and later Fed rate cuts, so this actually creates room for the BOJ to raise interest rate earlier. So currently, we expect the BOJ will likely deliver another rate hike in the third quarter of this year. We anticipate a potential 15 pip rate hike in Q3, given the continuous strength in the U.S. dollar, and this drive the yen to hit more than 30-year low. So with this scope for the BOJ to further adjust interest rate, we also project 2 more interest rate hike in Japan going into 2025. We expect 1 hike in Q1 next year and another hike in Q3 next year. So taking into account our projected rate hike in Q3, we anticipate the upper bound of the target range for the Japanese policy rate will go up to 0.75% by the end of next year. So this would reflect a policy normalization in Japan, and this should support some stabilization of the yen going into second half of the year.
All right, some aggressive moves coming from the BOJ. Fan Chiukwang, Asia CIO and HSBC Global Private Banking and Wealth. Thanks so much for joining us. And that is, in fact, our Bloomberg question of the day as well. Will the BOJ or the Fed move rates more in 2024? And that is becoming a very live question indeed. Still to come. The clock is ticking for TikTok in terms of its fight for against the U.S. divest or ban bill. Eurasia Group's going to be joining us to tell us what this means for digital diplomacy. That conversation coming up later this hour. First, though, we're going to have more on the investor backlash to Meta's earnings as it doubles down on its AI ambitions. This is Bloomberg. TikTok says it is ready to challenge a law that would ban the app in the US unless its Chinese owner ByteDance sells its stake in the company. President Biden signed that legislation on Wednesday as part of a larger foreign aid package.
Rest assured, we aren't going anywhere. We are confident and we will keep fighting for your rights in the courts. The facts and the Constitution are on our side, and we expect to prevail again.
Right, let's bring in our tech reporter Alex Barinka for more now. Alex, we just heard from the TikTok CEO there saying he's going to fight for Americans' constitutional rights. They give us a bit of a preview of what this legal battle is going to be about.
It certainly does. That's the message he has for users and also for employees internally, that this fight is not yet over. TikTok and its parent company ByteDance both expect to take this to the courts with the hopes of either delaying the enforcement of this bill or getting it killed altogether. That First Amendment argument is one that we very well could see, with them claiming that the government is infringing on its users' rights. We also could look to some of their past legal battles for other clues on the arguments they might have. The state of Montana, in fact, had a bill that aimed to ban TikTok in that state, and TikTok sued, as did a group of users whose lawsuit TikTok actually funded. So we could see folks on the docket who are not just TikTok or ByteDance, but perhaps some of the users, content creators, or some of the merchants that are now selling on TikTok Shop.
So where do we place the odds of this legal challenge being successful, and how long could it potentially go for? And I mentioned that in the context of a presidential election coming up in November.
Of course, our Bloomberg Intelligence litigation analyst expects that if a appeal gets filed to the DC Second Circuit, which is a very likely choice for this, the legal battle could be expedited and be wrapped up as soon as the end of the year in the fourth quarter. And he puts the chances of ByteDance and TikTok succeeding and overturning this law at a mere 30%. So certainly less than the confidence that it sounded like TikTok CEO Shou Chew is bringing to his message to users. And that context there with the election is incredibly important. The U.S. will vote on the next presidential election in November. And this deadline for ByteDance to sell or divest its stake in TikTok actually comes due the day before the presidential inauguration in January. So depending on who wins that presidential ticket next year could have a big impact on this. Obviously, President Joe Biden signed this bill into law on Wednesday morning in the United States. And if he ends up still being the president in that seat, he's leading in the Democratic Party right now, then he might very well see this out as a ban if ByteDance is not able to offload its stake. But the Republican frontrunner is Donald Trump, who in recent weeks has changed his tune on TikTok. He thinks that it should actually stay in America. If Donald Trump wins the election come November, then TikTok and ByteDance might actually be in front of a friendlier audience as they make their argument to stay.
All right, tech reporter Alex Barinka there on the ban or divest TikTok bill. And we're going to delve into how that legislation could impact ties between Washington and Beijing. Eurasia Group's Xiaomeng Lu is going to be joining us later on this hour. We have plenty more to come on Daybreak Asia. This is Bloomberg. All right, let's take a look at how we're tracking in commodities at the moment. Iron ore continuing to put in a spirited recovery. We're better by another 0.75% right now. I can't tell you how iron ore miners are doing in Australia because we're closed for a public holiday today in Australia and New Zealand. Now, copper is an interesting one. That's pulling back from those levels that we saw a little bit earlier. It was getting very, very close to $10,000. There has been some reluctance from some of copper's major consumers in terms of paying that much. We've got BlackRock, however, saying that copper needs to rise to $12,000 to incentivise large-scale mine investments. So the demand for copper is certainly there, but the willingness to pay these eye-watering prices seems to be absent. All right, let's talk a little bit more about the commodity space. We're hearing from BHP, the world's biggest miner. It's said to have approached Anglo American about buying the 107-year-old company, and this could be the biggest shake-up of the global mining industry in more than a decade. So for more on this Bloomberg scoop, we're joined by commodities reporter Martin Ritchie. Martin, what more do we know about this?
So far, we've had confirmation from Anglo American, which is BHP's target, that they have received a proposal from BHP. And as you said, Paul, this would be a really big mining deal and perhaps one of the biggest M&A deals this year. Now, BHP is the world's biggest miner. It produces everything from iron ore to copper and nickel. Anglo has a similar profile, a lot of different commodities. But what's really the key here, I think, is copper. Anglo has a substantial production in copper. And as anyone who watches the commodity space knows, there's a lot of interest in buying copper around the world because people think there's going to be a decade plus of very rapid demand growth. We don't have any confirmation from BHP yet. As you said, it is a holiday in Australia. We'll see what happens. But this is a deal that will shake up the mining space and could dominate the agenda this year.
Yeah, it's been some time since we've seen such large-scale deal-making from BHP. To what extent is this becoming a bit of a trademark of CEO Mike Henry's leadership? And have we had any response from Anglo about this reported bid?
Yeah, that's right. I think everyone understands that Mike Henry, CEO, probably wants to make a big stamp on his leadership. The BHP has already made a big deal in copper. It bought over Oz Minerals last year. That was a $6.4 billion deal, so that expanded their portfolio there. They've already said that in taking over Anglo has said that BHP's proposal will see Anglo first spin off its iron ore and its platinum business in South Africa, and that really emphasises this focus on copper. Rio Tinto, BHP's rival and the #2 iron ore miner, has also been looking to build up its copper business. And we saw Glencore, the international trader and miner, try to take over Canada's Teck resources as well, principally for copper and zinc. So you can see how this is shaping up into a big battle for control of the world's copper resources.
All right, commodities reporter Martin Ritchie there. Let's take a look at how we're doing in the FX space at the moment. Of course, we are very closely watching the yen. Well, we're always watching the yen closely these days, but especially so now. We're at levels that we haven't seen since June 1990. The yen now weaker than 155 against the greenback. So against that backdrop, we have a Bank of Japan meeting starting today. The BOJ has pledged that it's going to do something about the level of the currency. We'll have to wait and see what that is. Still to come, U.S. Secretary of State Antony Blinken touches down in China. The U.S., of course, moving to force a sale or a ban of TikTok. So we're going to discuss the implications of that with the Eurasia Group next. This is Bloomberg. Well, we're just over 30 minutes into the trading day this Thursday in the Asia Pacific for South Korea and Japan. No trading in Australia and New Zealand today, but Avril Hong's keeping an eye on things in our Singapore studio. And Avril, plenty to watch today in terms of currencies and tech stocks.
Absolutely. I think for tech stocks, what we got from earnings and their plans, the likes of Tesla earlier in the week, and then now from Meta is really throwing a spanner in the works of these Asian equities. That negative sentiment coming through. We're seeing the Japanese benchmark as well as the Kospi both about 1% lower in the first 30 minutes of trade. The Kosdaq small cap gauge not doing as badly, but what we got from Meta I think raises the concern about whether tech can help to continue propping up this bull run in the broader markets, especially as it talks about how it's going to have to spend billions of dollars more for AI investments, and its outlook really disappointing here. And traders might also be reluctant to put risk on at a time where we are waiting out today for data coming out from the US, including on GDP, consumption, and all this could go along and shape the way that the Federal Reserve is going to guide monetary policy. We've, of course, been seeing this higher for longer narrative coming through. And all this is coming against the backdrop of a day where we've gotten SK Hynix earnings. The stock is still about 3% down today, despite that big beat on operating profit. I think the investor assessment is how the macroeconomic environment is actually shaping the broader markets. Let's change on now because, of course, as you say, it's really about the Japanese currency as well, as we've seen it weaken to that 3-decade low, not just on the spot rate, but also the real effective exchange rate. And the question about whether we're going to see intervention, some skepticism as to whether we will see actual intervention simply because of the timing. We are waiting for the BOJ tomorrow. That decision is due, not expected to change on rates. There are some corners of the market that think that given how inflation is treading, we might see some signals of quantitative tightening coming through. But flip the board again, let's take a look at how China futures last traded. They're pointing to a negative open, and this is after we got earlier in the week the Hong Kong stocks, for example, really shining and coming back, outperforming global markets as Chinese sentiment turns, sentiment towards Chinese equities turns, I should say. But we are watching out for the story about how sources telling Bloomberg that these Chinese officials have been telling brokerages to curb their exposure to the highly risky product snowball derivatives, among the things we're watching in the markets today, Paul.
All right, thanks very much, Avril. Let's turn now to geopolitics. The U.S. Secretary of State has arrived in China. He's on a mission to press Beijing on issues including its support for Russia and industrial overcapacity. Antony Blinken will meet senior Communist Party officials in Shanghai on Thursday, and then he heads to Beijing for a possible face-to-face meeting with President Xi Jinping. A hawkish U.S. election campaign could be a test for a stabilization in ties that was brokered last year by Xi and President Biden. All right, let's bring in our next guest now. Xiaomeng Liu is Director of Geotechnology at Eurasia Group. Xiaomeng, thanks for joining us. As I mentioned there, Antony Blinken heading to China with a message about overcapacity, support for Russia, but following the passage of the TikTok ban or divest bill, do you think China's going to have a message for Antony Blinken?
I would expect this issue to be on Antony Blinken's meeting agenda with Chinese officials, because I think a lot of the decision makers in Beijing here are very frustrated about the way U.S. treated TikTok. And we expect Beijing's initial response to this ban to be symbolic and muted. But I think there's definitely a chance for them to talk about it over at the negotiation table this week in Beijing.
Is this the sort of thing that can be negotiated out, though, particularly in the context of U.S. election season?
I'm not sure either side will be in a position to negotiate at this point because President Biden just signed the bill into law yesterday. I think the next step is for TikTok, as they promised in public domain multiple times, to challenge this law in court. And through this communication, I think China will gauge U.S. potential reaction and also how things will play out in the future in order to put their plan together and think about how do they respond when the eventual TikTok exit from U.S. market happens.
Yeah, it's shaping up to be a very interesting courtroom battle now because TikTok already signaling it's going to fight this on constitutional grounds, a breach of the First Amendment potentially as well. How long do you see this dragging out for, and where do you place TikTok's chances of success?
I think they will fight the legal battle as long as they can. I have no doubt they mobilize a lot of resource on the legal front. But in the meantime, they have up to a year to deal with this divestiture order. If they couldn't wrap up their process, then they are forced out of the U.S. market. I think at this moment, ByteDance doesn't have a very high hope that they will be able to win the battle in court for TikTok.
So let's explore some of the potential outcomes here. If they lose that battle and TikTok is divested, what then happens to the data, the algorithm, both of which the company is very protective about? And is there anything Beijing can do to intervene?
There's a lot Beijing can do to intervene. They will have to issue approval for this deal if TikTok were to sell its core algorithm to U.S. buyers, which is the most valuable technology asset of the platform. But Beijing is unlikely to give that permission. So in that case, TikTok can basically sell the platform, the brand, to U.S. buyers if there's a deal interesting enough to U.S. stakeholders, or it will have to leave the U.S. market altogether.
Or there's another potential option here as well, and that would be potentially to suck up a ban, leave the US market and try to return later. How appealing would that option be?
I'm not sure they have much legal recourse at this point. They can choose to withdraw from the US market altogether, just like Google and other US social media network did in China 20 years ago. I think if that's the scenario, which I think is a likely possibility at this point, they will leave the US market, but they can still compete in other global markets. Even I think US is their biggest overseas user base and most lucrative one as well. I think that's a big sacrifice for TikTok to make, but maybe that's the eventuality the platform has to face.
Yeah, no doubt other Western countries, allies of the United States, are going to be watching this court case very carefully. Regardless of the outcome, what are the implications for TikTok and other countries?
I think in the EU, which is another very big market for TikTok, the company's already being investigated for Digital Service Act violations and identified as a gatekeeper subject to additional scrutiny. I would expect the European regulators to look at these matters independently because they believe their legal and regulatory framework deal with all these potential privacy, data security, antitrust concerns on its own ground. I think they will see this US episode of TikTok saga a reflection of the geopolitical context between US and China. And I think for the global South, a lot of the emerging market, they are likely try to stay away from the spat. And I think in that case, TikTok can have a longer lifespan in EU potentially, and they probably will put more investment in the emerging market where they face less headwinds in the future.
All right, Xiaomeng Lu, Director of Geotechnology at Eurasia Group, thank you so much for joining us with your analysis. Still to come, Boeing gets a credit rating downgrade from Moody's, and that's despite reporting strong first quarter earnings. We'll discuss what led to that downgrade next. This is Bloomberg. The Auto China show in Beijing is kicking off today, the fair returning for the first time since 2019, bringing an array of unveilings from domestic and global automobile manufacturers. Chief North Asia correspondent Stephen Engel's right there. He joins us now from the event. Steve, what are the key themes going to be?
Well, there are many key themes because, look, we haven't really been here in earnest in 5 years, and the EV landscape for sure has changed dramatically since 2019. So many more Chinese brands that dominate this local market. So that's probably theme number one, how the Chinese EV makers over the last 5 years have created I wouldn't say a monopoly, but they dominate. In the first quarter, the top 10 brands, models that were sold in China, 9 of them were domestically made Chinese brands. Only Tesla cracked the top 10. And also, again, these Chinese makers are improving their quality and also lowering their costs. So what do the legacy car makers from Europe, Japan, and the United States, who used to dominate here, how do they compete in this domestic space when the locals are engaged in a price war as well to bring the cost down? Volkswagen, for one, they're bringing their investor day here. They're bringing all their top executives. They have 20% of the internal combustion market here in China, but only about 2% of the EV market. Have they lost the space because of the EV switch here in China? BMW and Mini, they're bringing 15 models here. They're testing the waters, as is Mercedes. Can they regain ground when they had dominance here with the internal combustion engine in the EV space? That leads to really theme number 2 in the price war. Some of these top models from BYD. BYD now has 33% of the EV market here in China. Some of their models are priced at $11,000 or below. How do the Europeans and the Americans and the Japanese compete in that space? Third theme, exports. All of these brands have big export ambitions, including the stall we're at here, Great Wall Motor. They have been exporting a number of their cars and their SUVs abroad. But again, we're against the backdrop of rising protectionism around the world, with Europeans and the Americans talking about overcapacity and potential anti-dumping subsidies. It's a big theme. It's a very, very sensitive issue here. Getting people to talk about it in earnest is going to be a challenge, obviously, because it's the biggest export challenge for these Chinese makers. And finally, the big theme on technology is smart EVs. We've already seen Xiaomi in March launch its new SU7. So we have the phone makers and technology companies here in China moving into the EV space, the smart EV space. Huawei also has about 4 or so different partnerships. So there's Huawei-backed EVs as well that are making some noise. So a lot of themes to talk about over these next couple of days here at the press days as the Beijing Auto Show kicks off in earnest today.
Yeah, and as you say, back for the first time in 5 years, so plenty of big names joining you down there as well. Who are you going to be talking to?
Well, we're here, as I said, at Great Wall Motor, GWM, and we're going to be talking to Parker Shi, who's the head of their international strategies, coming up in the next hour on the China show at about 9:10 Hong Kong, Beijing time. So you got to listen for that. Also, Bill Russo, he's a long-time China analyst. He'll be with us in the 11 o'clock hour. Later, we'll be hopefully talking to the BYD, the German head of their design team. And that will be very interesting. Wolfgang Egger, can probably tune into that tomorrow. A number of things different. Just juggling the different events today is going to be the biggest challenge, and getting as much coverage as possible, Paul.
All right, our Chief North Asia correspondent Stephen Engel, he's down there at the Auto China show in Beijing. Well, sticking with cars, Ford has posted its first quarter results. They beat expectations on strong sales of work trucks. The automaker has dialed back an aggressive electrification push. Its EV division posted another quarterly loss. Still, CFO John Lawler told us the company is on track for a strong year.
Well, we had a really solid quarter. And, we didn't expand our guidance range of adjusted EBIT between 10 and 12 billion, but we have indicated that our trajectory is towards the high end of that guidance. So, it looks like we're on track for a really solid year this year.
I'd be remiss in not asking you about a lot of the concerns right now going on in the EV space. The Model E business at Ford was at least the worst performing of the major businesses. We got earnings out of a couple of your competitors, including GM and Tesla. And at least on the EV side, things weren't much better. Do you see any hope of improvement in that business this year?
Well, you know, we're segmented, so we're different than many of our competitors, at least the traditional OEMs. So you have the transparency about where we're at with our electric vehicle business relative to our commercial business and our internal combustion engine business. So you have the transparency. Look, we know that we need to have the electric business stand on its own. It needs to be profitable. It needs to provide a return on the invested capital, and we're working diligently to get there. And you know, we have a lot of hopes, and we know that our second generation of vehicles that will be coming out in a couple of years are going to be a big step forward and bring us to the point where we will be profitable. So we won't launch them if we're not profitable. So, you know, we've got to make the best of it through this period here until we get to the second generation vehicles, and we'll continue to manage that and optimize across the company.
That's the Ford CFO, John Lawler, speaking to Bloomberg's Romain Bostic. Well, Moody's Ratings has downgraded Boeing's credit score one notch from junk. This is even after the U.S. aircraft maker beat estimates for its first quarter earnings. That downgrade coming after Boeing said it burned through close to $4 billion in cash as quality issues plague output. For more, Bloomberg Intelligence senior aerospace analyst George Ferguson joins us. So, George, is that cash burn showing any signs of slowing down? And what else did Moody's have to say?
Well, so on the earnings call today, what we heard from Boeing was that they expect cash flow to be negative again in the second quarter. Not as bad as the first quarter, not that $4 billion free cash flow burn, but still they expect it to be sizable. I think that that's a concern for investors. The plan at Boeing is all about a turnaround in the second half as they increase production. Right now, production is pretty slow through the factories as they're trying to stabilize it, improve quality, and they're working on a plan for the FAA for how they're going to maintain that higher quality through the factory. And so, again, they're going to turn it on in the second half, and that should, they hope, generate a lot of cash. But right now, they're down to about $7 billion cash and equivalents, which is a pretty low point for this company.
Well, we're going to hear from Boeing's major competitor, Airbus, pretty soon with its first quarter results. Demand for aircraft still pretty strong, but costs seem to be a focus for Airbus. What are we expecting to hear?
Yeah, so demand is strong for both Boeing and Airbus aircraft. Airlines around the world really want the latest technology. It's got better fuel burn. But the industry coming out of the pandemic has just had challenges with supply chains. Boeing's are especially bad. Airbus has done a better job of keeping theirs healthier. But there's still that inflation and those challenges in the supply chain where they have to take over a supplier, help them fix a problem, has really led to a profit landscape that's just harder to achieve pre-pandemic profitability than I guess that we all would have expected. Plus, they aren't up at those levels of builds yet. They're in the sort of the mid-40s for their A320, the big money-making airplane for Airbus. As they step up into the 50s a month or so, that ought to get better. But again, that pain inside the supply chain just isn't allowing that profitability and those profit levels to be reached yet.
All right, Bloomberg Intelligence senior aerospace analyst George Ferguson there. And you can watch us live and see our past interviews on our interactive TV function, TV Go. There you can also dive into any of the securities or Bloomberg functions that we talk about. And you can also become part of the conversation and send us instant messages during our shows. This is for Bloomberg subscribers only. You can check it out at TV Go. This is Bloomberg. Meta shares plunged in extended trading after it announced a disappointing revenue forecast and plans to spend billions of dollars more than it had previously anticipated when it comes to AI development. Bloomberg's Ed Ludlow has more from San Francisco.
Mark Zuckerberg outlined that Meta's put itself in a position to be the leading AI company in the world. And there is a commitment to spend on the infrastructure needed to support that, to build future generations of models on the back of the success of Llama 3. The problem is investors just aren't buying it. And the message that really hit them in the call was that it's going to take time for it to show up meaningfully on the top and bottom line. What we're talking about is Meta AI, the current generation of the assistant. They're trying to scale that. Smart investors, quote, would be able to see that even if revenue is not immediately obvious from AI, you can see their AI products like Meta AI, the assistant, scaling, and you can see the monetizable opportunity. But Meta's business is still mostly advertising. They're seeing impressions growth. They're seeing the average ad price or ad price growth go up as well. And in some cases, you could argue that's where AI is showing its value. Meta's kind of damned if they do and damned if they don't. There have been segments of the market calling for some time, hey, spend more on AI infrastructure, get going on this. And then there are those that want to see the prudence. So that's the message from Zuckerberg. Be patient. Trust us. It's going to cost us billions of dollars to get there, but we will get there. When does this largely advertising-based business see serious top-line growth from AI? Apparently it's coming. Whether investors believe it, well, we'll find out in the markets. This is Ed Ludlow for Bloomberg News in San Francisco.
All right, let's take a look at some of the Asian tech movers in the Asia session at the moment. We've got some reasonable declines going on here off the back of that Meta earnings disappointment there. If we take a look at Rakuten, it's off by almost 2% at the moment. The big name that moved today, though, however, was SK Hynix, South Korea's second most valuable company, really reporting blowout first quarter numbers. Net profits coming in at 2 trillion Korean won. That turns around a big net loss for the same quarter the previous year. The company is saying those strong quarterly results due to that high bandwidth memory, other advanced chips for AI data servers as well. Let's take a look at Boeing suppliers as well. Of course, Boeing, as we were just discussing, seeing its credit rating downgraded to one notch above junk by Moody's. Cash burn really the issue there, although Boeing suggesting that burn is going to slow down in the next quarter. Boeing suppliers having a bit of a rough ride in the early going here in Asia. That is it from Daybreak Asia. Markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen.